Hi, this is Randy Finney with the right side of the chart, and this is an early, actually a mid-session update for Thursday. Thank you, February 5th, 2026. It is 12 o'clock p.m. Eastern Time on the button as I'm starting the video. So yeah, right around midday. Here's what I'm going to do in this one. Just a brief update on the equity markets, things I'm watching, where the opportunities might be. I'm going to start out, of course, with the equity markets and reiterate that not the last, but pretty much close to the last of the mag-8s. You know, the big core ones. You have Nvidia, obviously, again, end of this month reporting. But other than that, Amazon kind of takes it home with what I call peak earnings week. These last 2 weeks, this week and last. So we had Alphabet last night. So I'm going to go over touch on the mag-8s like I like to do. I'm hyper focused on those. The financial sector, I want to do an update on the software stock. Somebody just asked me about that. Was that one still have a chance of playing out? I'll get to that in a second. What else? If time permitting, I'll get to. I'm seeing, I had price alerts going off like crazy today. It's like, one of those popcorn days where you just alert after alert after alert. And so there's, other stock sectors breaking down. There's other opportunities. I just want to reiterate my preference to, trade a diversified portfolio, different stock sectors, commodities, asset classes. Stocks are one asset class, bonds are another asset class, commodities are yet another. And even within commodities, you have a tremendous amount of variance at any given point in time. I can guarantee you in bull market, bear market, there's some commodities going up, some going down, some with bullish charts, some with bearish charts. Again, because, rough rice has nothing to do with natural gas, right? They're two different futures contracts, commodities you can trade. Financials I'll hit on. And then finally, let's talk about, the big move. If the market does break down, forever and a day, if you're new to the site, I can tell you forever and a day, I've been harping on these October 10th lows. That is the bottom it turned out to be, when we had that. It's really just still the same swing trade on QQQ. It's taken a while. That was the first target. We hit it right there and we bounced. And back then, before we hit it, I said, the markets aren't going to go anywhere to the downside until they take out those lows. And I still maintain that. And it's since become another key reaction low. So I think that's it. Then right below it, of course, now, remember back here, when I first put out this trade, T2, it's always a price level. It's hard to, I always say it's hard enough to predict where prices are going to go on a stock or the index. And it's a whole nother degree of difficulty to figure out, determine when. And that's one reason, I've said this many times in the past, I don't trade options. Well versed in them. I used to be a stockbroker. That was part of our Series 7 exam in depth. You got to learn everything you can about options and traded them over the years. But I've learned that, and this is a great example. The trade hasn't hit that second, and that's just a near-term swing trade target. I do have longer-term targets that I will most likely be turning my focus to if T2 is hit. However, there's a good example where T1 was hit in relatively quick order and the market's gone sideways since. So had you, laid a bet, let's say you had, bought some puts, figuring that we would have gone down, because that was, my initial, I had the arrows drawn like that. We'd get a reaction off T1 go down. But those options would have expired most likely by now, unless you gave them a whole lot of time. So therefore, if you're in the shares, then that really doesn't matter, assuming T2 is hit. So let's go to SPY real quick. SPY. SPY has outperformed the NASDAQ 100 recently. And this is my trading range here. We had a brief spike above it, which I predicted would be, I knew would be a divergent high. That wasn't a guess. That was a mere fact based on how severely the indicators are lagging. So that, but what the prediction was, just like it was back here, that any new high, breakout to new highs would fail, send you back to the bottom of the range, ultimately break down below and give us what we got back then. So far we have a failed breakout. It's actually failed twice, and it keeps hitting, on that first failure, which I highlighted at the time, this failure above the range, came back, and you have this midpoint here of the range. It's a rough midpoint. Those tend to define when I find trading ranges, whether it's sometimes they're price channels, upward or downward sloping. You can see prices on a security or the index doing that. And usually somewhere around the middle, you can put a line that kind of delineates. You spend time on the top of the trend. And then once you break that midpoint line, the next shot's down to the bottom, right? Like it was right here. And then it was resistance here, here, here till you broke it. Then you went to the top of the range. So that's what I'm looking for on SPY. And that will most likely increase the odds we're going to go down there. And as I've said, this trading range is getting very, very long in the tooth. And the fact that we've already had another failed breakout. Remember, failed breakouts are bearish for the simple fact a breakout to new highs, especially all-time highs, is on face value 100% bullish. Now, if I traded in a vacuum, if I didn't look at indicators, momentum indicators, divergences, market leading stocks, and the million other things I'm looking at, I would say, yeah, that's a breakout. You buy it. And the reason that they're bullish on face value is because every single investor in the S&P 500 or whatever security breaks out to new highs, they're all profitable. You don't have a single, I'm kind of generalizing here, but you don't have a single remorseful seller that for the same reason all-time or 52-week lows are very bearish. Everybody's underwater. Most people just want to puke it up and eventually do throw in the towel. And so that tends to bring in buyers when you have breakouts to new highs. And then once the breakout fails, those buyers realize they jumped the gun, that the reason they bought is no longer the case. Now, again, it's not lights out. Sometimes you break out and then you come in, back test a little lower and go on up. So that's still a possibility. We're going to keep, I always keep my options open, but this is still the scenario I favor. And again, that's about 670, 380. We'll increase the odds. We're going to go down. And again, based on this, and remember, there's, I covered, here, I'll do it for you real quick. I shared this chart with you. This is the FINRA margin interest. And again, this is to me, a very powerful chart that I don't think can be underestimated. And we're at really nosebleed levels. And it's simple. This is almost a kind of a guaranteed thing, if you will. Again, I hate to use that word. It's not 100% guaranteed. But once the trend reverses, it's simply a domino effect. It's a vicious cycle. Selling then begets more selling. As prices drop, stop losses are hit. As investors incur losses, and especially again, it's one of the most obvious trades I've seen in a long time. Just like the silver parabolic bubble was recently. At the height of a bull market, when complacency is just rampant as it has been, and everybody believes the market's just going to go up and 2026 is going to be another good year and blah, blah, blah. And the AI bubble is not a bubble and it's just got a lot more room to run, all that stuff. The bottom line, and again, you can debate that all day long. We can sit here, and that's what they do on CNBC and Bloomberg all day. Bring on people to debate that stuff. That's just talk, rhetoric. What I can tell you for a fact is that towards the height, towards the peak of an extended bull market, as that chart shows you, everybody's loaded up on margin because the confidence is so high and they figure I keep making more money and more money. I'm going to leverage up and just enhance my gains. And then again, it goes the other way for the reasons I just stated, that more so when the volatility starts to expand, what makes it even worse is the brokers will start to tighten margin requirements, both the exchanges and your brokers. And then that further exacerbates the selling because the person that was leveraged to the hilt, so happy with their NVIDIA and their Micron and their semiconductors and you name it, that same hot, high-flying stuff, that trade just goes the other way. It's just money flows is all it is. Supply and demand, more selling. So, and guys, and I want to speak to especially those of you that have been here for a while. I've shared my long-term views, long-term targets. Those are viewed here. We got going there. We had a nice drop. We hit the third of 7 targets. We bounced, and I've resequenced the first couple here again for you, T1, T2. And along the way, we gained that drop with basically impunity, even the counter trend rallies, as we did back here. This whole thing, we were long. We covered, I post as active swing trades, the 2 rallies, the 2 big counter trend rallies, shorted back, got back short at the 200s. Now here, this did the same thing. We covered those lows with a target back to the 200s. and then a no, try to short there. Didn't work. A new, for the new leg down. Then I had a no shorting, no more shorts above the 200. That was kind of the policy, if you will. And then took a few pot shots along the way. And most of those were on the 60-minute chart. And each of those, like this current, trade, been highlighting on the 60-minute charts, all these divergent highs. Each of them have had the potential to be the one that takes out the October 10th lows, and I've treated it as such. And we've had multiple targets, different time frames. Here's what I want to say. The point I'm trying to make with that margin chart that I showed you, with margin continuing to soar and go almost parabolic. The use of margin, the excess, that my sentiment indicators, put to call ratios, all that are low. I view it like a game of Jenga. If you've ever played that game, that's the game where you have blocks, little wooden blocks, little party game, and you stack the blocks. You originally stack the blocks. Is that how it works? Yeah. And then each person takes a turn pulling one of the wooden blocks out, right? And it's kind of like those little quarter games at the arcade, where the thing keeps pushing the quarters. You're trying to feed a quarter in and get them, hopefully a whole stack of quarters are going to fall. Well, Jenga's like that one. Eventually someone pulls a block out and the whole column can no longer support itself, right? I think you guys know the game. So that's really how I see the market here. And maybe this is another block that comes out, just like this one, these little corrections. But based on that, everything I just talked about, the margin requirements, the long-term charts, there's a potential that once that trade gets going, just like the Jenga block, when it finally starts to fall, there's no stopping it. When you pull that one and you see it wobble in a certain way before it even falls, you're like, oh shit, that's it. You can kind of see the whole thing is going to go over. So that's kind of how I'm viewing the markets right now. And I'm open to, if they come in and buy, and they buy the 200s again. Remember, I've given you a scenario here. This is just a typical regular swing trade. It's taken a little longer than most of the swing trades on the site. But again, I just spoke to that. It doesn't matter, still only talking, a few months if T2 is hit. And I still suspect that when we break the 589 level, the October 10th lows, and it's also the second reaction low on both SPY and QQQ, will probably pierce the 200s, because that's often what you do, and then hit T2, maybe coming back, test them from below. Again, that's just kind of a working theory. We'll see. But once they're taken out, remember, if the 200s get taken out, even if we come back, park on them, or bounce off them for a little while, once they're clearly taken out, that's going to sharply increase the odds for my longer-term weekly targets being hit, especially this range right here. Because if you get down to this range, that's 500 on QQQ, the 200s are clearly in the rearview mirror. And again, I've gone over that, ad nauseum. I'm sure you guys don't want me to go to these long-term charts. The red and the blue line are the 200s on this weekly chart. They're just put 40-week moving averages. And again, there's very few times, but the biggest, and these were just corrections, guys. And this one, you can see, got definitely got bigger. And these corrections, one of these days is going to be a correction that actually turns out to be the first leg down of a much larger bear market. And so we'll take it day by day. I know we from time to time like to speak on the long-term outlook, and I'll move this over. This yellow line right there is your primary bull market uptrend line. When the NASDAQ peaked back, technically the NASDAQ bottomed in was November of 08. Everything else, the S&P, the small mid caps, they all bottomed in Dow, everything in March of 09. And that's our secular bull market uptrend line. And based on the technical posture, it looks to me that a breakdown is imminent. But when I say imminent, it's not like when I got that post out to you Thursday night at 10:30, and I told you a breakdown and crash in silver appeared imminent. I said, I was more specific there. I said as early as tomorrow, Friday, which it was. That was the day. And then, or I said, or next week. So that's imminent, because what was that? That was a 60-minute chart. very short-term time frame, 60-minute candles. This is a monthly chart. Every single candle on here is 1 month. We're looking at a span of decades, and we're looking at a secular, a cyclical bull market within a much larger secular bull market. Okay, the seculars are the big ones. And you know, the stock market has been, you have to go to the S&P because the NASDAQ didn't even wasn't even in existence, or the NASDAQ 100 back then. Either way, okay, so I just wanted to say that. And so, you know, this is longer term stuff, and you know me, I'm, you know, today and yesterday I got very short term, you know, day trading ops where you're only looking for 1% bounces. And now this is longer term stuff. So the long term stuff just takes a while. And again, so a breakdown below this trend line imminent when you're discussing a time frame that's measured in decades. Imminent can be months or years. Okay, and the first kind of early clue, which I just parked a second ago, let me put this back down, will be when we get, we've got a lot of real estate between now and the end of the month. It's only February 5th. But that PPO histogram, which is, as of now, remember I covered this yesterday, it's teeter-tottering, it's crossed down, but that doesn't matter. All that matters is how we close on the end of the month. And then, of course, you want to see it on the S&P 500 as well. It's got a little room to do it. But thing about market tops, once we break the October, if and when we break down from these trading ranges, especially we break the 200s, it'll be fast and furious. There's a lot of hot air in the market right now. So you'll get a big red candle that will easily take you down and give you that crossover. So that's it. So I'm looking forward. I think this month has the potential to do it, or I wouldn't be covering these long-term charts. And then I have other indicators on my monthly chart, like that blue line that's right here. Turn everything off, park this out of the way. That's your 401k indicator, I call it. It's the 20-month exponential moving average. You can stop the video and look at it. You will not find a better indicator for long-term investing than that. And I give it a 10 on a scale 1 to 10 for indicators because I factor in simplicity along with effectiveness. And basically, you're long when the S&P or NASDAQ are above that line, and you're short or out of the market when it's below it. And it's a monthly chart, so you only take the signal based on the monthly candlestick. So all these, what you might say are whipsaws, false sell signals, were not. They were, if you had one, you know, that one right there in COVID, you did park, where'd that candle close? I got to set these candles, different chart properties, candles, price style. Here, you can just toggle this back to have the, you know, I always like to have my candles filled based on the open versus the close for the candle. And you can toggle between having the up bars filled or the down bars filled. Either way, and then you can see where you closed. So that one was COVID, and you did close below, but then you regained it the following month. And again, all these other ones were just intra-month whipsaws. You can see there, green one came back above. Anyways, again, the track record is about as close to perfect as you can get. And remember, you know, in a bull market, most of the time you're going to be above there. So, like I said, let's get back to the shorter term charts, because if you wait, and that's the key thing, guys, the problem is waiting for a monthly candle to close below. Sometimes you can have a month that the market drops 30% or more. And again, you know, as I like to say, if you wait for Kramer or the crew on CNBC to tell you to sell your stocks, well, guess what? The bear market or the correction is probably close to being over at that point. When that, you know, the masses turn bearish. And all right, so we'll watch those. Let's not worry about it right now. We're so far above on the monthlies, that's not important. Again, my focus to get back on task is the daily charts. And this midpoint right here, about 673.79 or so on SPY, QQQ, you know the level. Going back to the short-term chart, 60-minute chart, I'll talk a little bit about that today. There was quite a few comments. You can go on the site and let me pull that back up. Okay, So there were some follow-up comments somebody made mention, and I agree, Alan. Yeah, absolutely. By the time I fired this one off to you today, the darn thing, the Qs exploded off that level. So as I went on to say, yeah, I did, my best to mark up that chart. Here it is. Where is it? That was it. So right after I got off to, boom, pop, we hit our was that? Yeah, that was it. That was today's trade. We got the 1%, hit that level, had a nice reaction. I'll get to the live chart in a second. There's a decent chance we may go up and try to fill the gap. I wouldn't go for a full gap backfill. And I'm speaking to those that might want to, like I say, they say there's a million ways to skin a cat, and there's, a million one ways to trade. You can either get out, get the quick buck. That's usually what I like to do, but then recycle back in on a pullback, and that's what I'm doing. I think there's a good shot. We're gonna try to run up here a little bit more for the reasons I stated in that first post. But that was it. So that's the trade we did yesterday. We skimmed out that quick 1% pop, stuck to my trading plan. Told you I'd go home short, did, and then decided to, again, if it almost bothers me when I think there's a high probability of a bounce, even if it's 1%. Again, an NQ contract is over 500,000 net notational value per contract. Now, if that's too big, you can trade the MNQs. They're 1/10, I think. So you're talking 50,000 per contract. But 1% bounce on the NQs is going to be $5,000. That's 1% of $500,000. And then cut that by 10th. So you're talking $500 per NQ. Am I doing that right? Yeah. So, and remember, it's twice that, because when you're short, if you sidestep a 1% give back, that's basically profits saved, right? You're avoiding that 1% give back. So per contract, you save 5,000, you turn around, turn it into a 5,000 profit. That's it. You're up net 10,000. That's how I look at active trading. And again, and it's and one more point I wanted to share on that is right here. Where is it? I made the point to say, okay, in reply to Alan, who said he wasn't complaining, just that, hey, yeah, bounce quick. And yeah, and that's, I can't, I've made the analogy many times in the past, trying to be a day trader, why don't you post day trades? Well, I can do hundreds and sometimes probably well over 1,000 day trades a year. It's almost impossible. It's like the analogy I use, your kid or you want to become a NFL quarterback, and Patrick Mahomes or Brady when he was playing says, hey, I'm going to teach you everything I know. Here's what we're going to do in the game. Come into the game, stand behind me, and mirror my every move. That's impossible. And it's impossible because even if he told you, okay, we're going to go in, I expect this defense, I'm going to call this play, I expect to hit this receiver on the down and out, over here. But then as the ball snaps and the dynamics on the field are just rapidly changing, as the quarterback may keep the ball and run it. If there's a hole there and you get first down, he may throw to the alternative receiver. He may be pass rushed and he has to break out to one side, and it all happens right away. So that's what day trading, that's how I view it. It's impossible to get those out. When I see the setups and the market's conducive and I've got nothing going on, then that's when I'll fire them out to you guys. And I have in the past. We've done this before. But that's the key right here. I want to say the takeaway is, the premises are the same as swing and trading and even investing. As we buy pullbacks to support. If we think those support levels are going to hold, those are the trade ideas I'll give you. And we can, we'll take a stock that has fallen to support that looks like it's going to reverse based on the charts, and with a stop somewhat below in case that support doesn't hold. And so the most important thing is, day trading is the same thing, just in fast forward. You're hitting the fast forward button. You're going for much smaller amounts because you're using a bigger position size, because you're going to close it out by the end of the day. So you don't have overnight risk. You don't have the risk of Amazon reporting tonight and the market loving what they sell, what they're selling or what they say in their report. And then boom, your shorts get blown out with a big gap against them. That's called overnight risk. Swing traders and investors have overnight risk. Day traders don't have that. That's when usually you're going to have those big moves, especially during earnings season. So the important part is there are times where weeks or months will go by where I don't day trade. because the markets are not conducive to it, or natural gas or whatever it is that's moving it. It can be very volatile at times, kind of goes into that low volatility mode. And so pretty much with the stock market, when the VIX is down towards the bottom of the range, day trading ops just aren't there. It's just, it's not the markets aren't bouncing ping pong in between these levels. And I've also noticed that technical analysis tends to shine during periods of high volatility. And that's when the fundamental folks that are buying and selling things on fundamentals, like Warren Buffett, trying to figure out earnings, and you know, they're running around like chickens with their heads cut off. They can't understand why Alphabet, for example, let's go talk about the FANGs for a second. As I expected, blew the cover off the ball. Great earnings, beat top bottom line. I didn't go through the earnings. I just heard it was good earnings, and yet here's the stock, and so that's that check mark. So, you know, record quarter, record earnings, yet the stock is down, you know, from where it was right before they reported, as much as a almost 12% drop. That's technical analysis. That's where the fundamental folks just can't understand what's going on here. The stock should go up after a good earnings report. And as I told you, I played the game, and I told you my prediction was it would be going down after earnings because of this. We broke down. That was a check mark. We've been back testing for several weeks. Then we got rejected. I said, you know, it was. I'll recognize it for what it was, an impulsive rejection, which is what I like to see after a back test. And now earnings are out of the way, and the stock is down here. Now it's holding that first support level I had here on the chart, 313.78. We're right there right now, or a little bit above it. So you can't write this one off just yet. This is what I call post-earnings noise. Again, I'll take it. It's a check mark if you're just taking price action on face value. But the market will digest what Alphabet had to say, what they reported, what they said in their conference call over the next couple sessions. And either way, right now it's a check mark. The check mark is the rejection off there, and now earnings are out of the way. So pretty much, to keep it, you know, at the risk of oversimplifying it, a break at today's lows should do the trick to open the door and get that, you know, final, you know, near-term pullback target I've been calling for with that test of the 200 days and this larger uptrend line right there. So yeah, looking good. But let's get to let's look at all of them real quick. Let's do that. QQQ coming up, not far off, but not all the way down to the bottom of the trading range yet. Here's a look at NVIDIA, still holding up. NVIDIA still on the neckline and above that head and shoulders I gave you yesterday, plus above the right on or just above the 200-day moving averages. Alphabet I just covered on price support or above it right now after briefly undercutting it. Apple still at that resistance level there. And Microsoft, this one is now broken. That's why it's a check mark. These check marks are for the bearish case. So remember, I you know, I'm a flexible trader. If I'm bullish on something, a green check mark is going to be a bullish development I'm looking for. When I'm bearish, you know, to build the case for a bigger drop, I'm getting these check marks. Now, it wouldn't surprise me in the least to see Microsoft recover that level. And let me just say this very clear, without a lot of mixing words. If the market can hold up here and doesn't take out the bottom of the trading ranges, doesn't clearly take out the October 10th lows, or does, but remember, you still have the key 200-day moving averages just below. So if it bounces and Microsoft can get above here, I still think that XSW trade has ability to play out. And I still maintain what I said before. I think there's, you know, at worst case scenario, that trade will most likely outperform the larger NASDAQ 100. You know, that's the software being a subsector because it's beat down. And with that being said, you have the suggested stop here. I'll get to it. Remember, Microsoft is probably the king of software stocks. So it is. You can't argue that. XSW is the trade idea. And when you look at it, we're, you know, again, right now we're at 152.56. So we're a little bit below there, not by a lot. And again, a trading plan is a trading plan. You either take it or you don't. I threw it out there as much of a hedge, indirect hedge to a short on the markets. But I can tell you, if the markets can hold up at least for a few weeks, and Microsoft gets back, I still think this trade has a potential to play out. And if it doesn't, it doesn't, and that's what stocks are for. Don't get married to it. Financials, of course, markets are only going to go so far without the financials breaking down, and they've been hanging in there like a world champ. I mean, we did have the failed breakout and back test. That was a check mark right there when we fell back below 54.50. And then we hit my 53.10 support level. We've been holding on that. It's a pretty good support level. Once that goes, you have the 200s just below. So if we break that, we go down to the this is kind of the red line for the market, if you will, and for the financials. Anything break below 51 should take them down much faster. And again, remember what I said in the beginning of the video. This can unwind very quickly, that margin trade. And so whether or not the financials and tech and QQQ break those levels I mentioned soon, as in it won't be any sooner than Amazon reporting tonight. It could be as soon as tomorrow, because Amazon will be out of the way, or over the weekend. So just be aware that the risk, just like it was in silver, when I threw that out there on Thursday night, the risk of a crash is elevated, or a quick move down in the market. And but these things have to happen. So like I said, we're not going to go down very far until the financials break down, especially that 5100 and QQQ and SPY take out the October 10th lows, and then the 200-day moving averages. Okay, and if they do, things can happen very quick. It's that Jenga game. We're getting that pile's gone higher and higher. Imagine, I think when you start Jenga, you have a set, you have a set number of blocks, and it's only so high. But imagine the stock market with that margin bubble. Imagine you bought multiple boxes of Jenga, right? And over time, you keep stacking it higher and higher. And so you're playing that game. So, and that's what I see in the stock market. The higher it gets, the more extreme the margin bubble gets, the bigger the drop is going to come, and the more, probably the swifter it's going to happen once it starts to unravel. Again, it's like an acceleration thing. That's why. So you start going down, and then you get to that point where you have the kind of that waterfall sell-off. It's happened in every correction and every bear market in the past. They hit that point of recognition. It's usually the third wave down for you Elliott wavers. P3 primary 5-wave trend. Wave 1 down, 2 up, 3 down on a bear market or primary down wave. P3 is always the largest and most impulsive wave down on a 5-wave cycle. And so you saw it back in 2008, worked out well, the Elliott wave count. Or I should say from the October of 2007 highs to the March 09 lows. Okay, so that's it. And let me see if there's anything else I want to cover. Yeah, oh yeah, you know what I want to cover? Bitcoin. Definitely want to cover Bitcoin. So, let me get to Amazon first, because they report tonight, and so does Strategy. And so I want to talk on Bitcoin, then we'll wrap this up. Amazon. Okay, so as I said in that post today for the day trade, Amazon is the first pullback to the 200-day moving averages. That is, I'll turn off all the lines. You can see the blue and red lines, simple and exponential. I use them both. And so this is the first test since you had you probably hit it in pre-market there, my guess, or pre or post-market. Close enough, right? You hit them there. You came down, hit the 200 simple. Here you hit them both. They came in together multiple days, near tag there. This is where we lost them right here, tried to regain them. 1-2 days back above, proved to be a failed recovery, and then the bottom fell out of the stock. Then it recovered there, a nice, beautiful gap above, very, very bullish. If you missed it, you had an opportunity on the back test of the 200 simple right here, and then that gave you this uptrend in Amazon. So this is the first pullback to the 200s. So it's very simple to me. This is one of the last remaining check marks I'm waiting for. Check mark to get it's a question mark. This is a check mark here. We do have one check mark already on Amazon. It broke this uptrend line off the April lows right here, right? I mean, we had check marks up here. Don't get me wrong. That was a larger, much more significant trend line, broken, back tested there, divergent high. then this more recently, this check mark. And now if we lose the 200s, and then this is my lights out level, about 211 on Amazon, where I think the bottom falls out of Amazon in the market. But they report tonight. And if they have a positive report, that will come up, and it's the first test of the 200s. Like I said, man and machine alike are going to buy pullbacks to the 200s. And once they go, then they start selling the stock. But in a bull trend, you buy pullbacks to the 200s. That's the only strategy. Or you wait till the 200s taken out, and then you can short it or sell it. All right. So let's see what they do tonight. If you're a big gambler, you can place a bet in either direction you want. I'm kind of, I like the two bull story. My favorite version, look it up, is from the movie Colors. That's in the 1980s. Robert Duvall and Sean Penn. You can watch that YouTube video as he tells them the story. So, that's the kind of let's walk down and get them all, right? That's the thing. So let's see what Amazon does. If we start breaking those support levels, there's plenty of downside to my long-term targets, 50+% drop in SPY and QQQ. And if not, guess what? There's some upside things. I have a lot of things hitting support. If like I said, software stocks are beat down, left for dead. Last few days seems to me to be a what's the word I want to use? Not a selling climax. There's that too, but a news climax. Like all of a sudden, remember, we were shorting. We had a lot of those individual software stocks that we shorted months ago. Many of them just hit their final price targets, right? And all of a sudden, in the last couple of days, I've never seen such a blitzkrieg in the news on how software stocks are dead and what AI is doing. To me, that's old news. In the charts, it's old news. That was the news months back when the charts said they were going to drop. So what I'm getting at is you reach that kind of point where everybody's bearish. Who's left to sell? That's usually when a stock's going to drop. And don't get me wrong. Please do not get me wrong. I think the software stocks and everything else over the next year are going to fall a lot more. I'm looking for a counter trend trade, and I'm not married to it. I'm just, again, it's not my favorite trade out there right now. It's just one that if the market holds up, then these guys are probably going to have a hell of a short covering rally. And it could be, and again, I expect them to outperform the QQQ. So if they hit, what does that mean? That if they go up, if the Amazon holds up and the market holds up, even if it goes and kisses the 200s, even if we have a little downside next week, pretty quick swoon down from Amazon, but then we bounce off the 200s, you've got about 14% upside in XSW. And I would say the NASDAQ 100 is a fraction of that. Even if it goes to make a marginal new high from this point, even if it holds this level, goes and kisses the 200s and goes up, you're probably outperforming the software stocks. But like any trade, it can go either way, and that's the current trading plan for this trade. And if it closes below 147.95, I'm going to move it out into the closed out completed trade category. Okay, back to Bitcoin. IBIT, Bitcoin ETF. This one, I said stops commensurate with your price target, right? Or did I give you a suggested stop? This is and has been the no ad zone. This is no bueno. There's no way to spin that as anything but bearish. It's taken out the that's longer term support. I'll get to Bitcoin in a second, the crypto, but it would have to get back into or above this $42 level to make a case, in my opinion, to add or re-enter or initiate a long position. You still have positive divergent potential. Like I said, it was never confirmed. You have to confirm it in my book. You need to make a bullish crossover on the PPO that puts in a higher low than the previous one. RSI has already taken out the previous low. It's extremely oversold. Let me get to the crypto chart. This is BRR, Bitcoin futures. You also have the small contract. It's a pretty hefty contract, both Bitcoin and Ethereum. BRR is Bitcoin, the big contract. ETHUSDRR. I know that's a mouthful. That's the ticker for the Ethereum futures. But they both have minis, and they're much smaller. I think it's MBT, the micro Bitcoin, and it trades off the same levels. Big positive divergence here. So if there's going to be a catalyst, and I'll tell you, I have to tell you, I have it just, based on the charts and all this one's been left for dead. I think there's a decent chance we're going to pop back up and recover. I'm going to get to the longer term charts in a second. And it might have to do with what strategy says tonight. Everybody's worried that strategy may have to start selling Bitcoin. If they do, it's just the death blow to Bitcoin as a whole. They have so much of it, and their whole strategy is iron fist, hold forever. But they're going to report tonight along, after the bell, along with Amazon. And so strategy I'm talking about, of course, not Bitcoin. Bitcoin doesn't have earnings. Bitcoin doesn't report earnings because they have no earnings. It's nothing. It's bits and bytes. But anyway, all right. So there's a, positive divergence, but I always say positive divergence, oversold conditions are not buy signals, far from it. They're merely conditions. And this divergence is only potential. These are momentum indicators. As I always say, this is the PPO and RSI, and they're both pointed straight down. If they keep going lower, you no longer have it. So what you need to see, it needs to reverse soon, and then you're going to have a nice divergent low on the 60-minute chart, potential trend line to pop, and then you have, they'll run at this gap first, and if they get back over here, this thing's going to let loose. So again, it's in free fall now. Doesn't look good because it's taken out the long-term support that we bought it at the other day. Let me show you that. That's right here. BTC, the actual crypto. This trades on the Paxos exchange. Divergent high, sell signal 1. I've been bearish on all along to this level. I was looking for a bounce there, and we've cut right through there like it's not even there. So again, until and unless, if we get back above there, then this whole thing will be a false breakdown. But as it right now, it's a breakdown, an actual breakdown, and that's bearish. So we need to see it get back above there and do so soon. Otherwise, I really don't have, not to say I'm sure it'll hiccup somewhere along the way, but that's my next, and has been for a long time, my long-term final target. Again, just like the software stocks, I'm not looking for road to new highs. I'm looking for a bear market rally, or was. The odds just went down sharply now that we're below there. But again, let's see what happens after tonight with strategy reporting. If they say something that somehow sparks the crypto bulls. And look, if they say the wrong thing, it could be a quick road down to that next target there. And that's, let me measure it for you. That's going to be, if that's the case, that's another almost 30% drop about from where we are. So do the math on that one if you're, going to step in there. So again, let's see if this one can recover. And we've already taken out the RSI divergence, but we still have the PPO divergence down here. RSI is deeply oversold, but as I often say, and I've said it many times, oversold is not a buy signal, it's merely a condition. But if I go back in time, which I'm doing here, the last time we were this oversold in Bitcoin was here and then here. That one you still had a little more downside left, not much, and then the bottom came with a divergent low. This time you're already in a bull trend. It was a pullback to that level. So that's that. Okay, 43-minute mark. Let me wrap it here. Silver, somebody asked. Silver, like I said, it's going to, I still longer term, the parabolic bubbles burst. Probably going to go down. There's some things I want to cover, and I will do in another video. But silver's been grinding. It's been a great day, active trading. I've been day trading that thing back and forth. Silver futures. There's 3 contracts you can trade. The big one, SI, the little one, mini one, the medium one, QI, and then the small one, SIL. But if you want those, it's quirky on Interactive Brokers. You can't even pull it up. It's the weirdest thing I've ever seen. You have to type in SILH6, and then it'll queue up the symbol SI, which is the same as the big contract. It's like a $400,000, $500,000 contract, but then SI is only like a $88,000 or so contract. So if you're, I'm just trying to, if that's your thing, if you're trading futures and silver and you're scared off the big contracts, even QI is half of silver, about $250,000 or so. So the smallest contract you're going to trade that I know of in silver is like that SIL. All right, guys, let me wrap up here. Let's see what happens tonight with Amazon and strategy. Oh, by the way, on strategy too, I'm sharing that as a a longer term short trade idea from all the way back here. I started highlighting it and gave it to you back here on the break of that level, and then S1 went. We've hit my first, second, and now boom, got it. Did we hit? Yeah, we hit T3A. All right, remember, I've been waiting forever and a day. I thought this would coincide with Bitcoin hitting that support level that we just bought it at, and that's why I haven't written off Bitcoin. This is a big target, a target I've been looking for now. Well, I just updated it today. Going back since October 13th, right here. And so that's it. So if you caught any or all of that 60+% drop from that sell signal there, they're reporting tonight. I can think of no better time to cover this trade. And if you want to take an aggressive trade, you could reverse it, go long. It might want to punch down through the bottom of the zone. Again, it's always aggressive to go long right in front of earnings, especially with what's going on with Bitcoin right now. You want to make a pretty strong bullish case. You always want to make a strong bullish case on Bitcoin if you're going to buy MSTR, right? It's just like you don't buy GDX unless you're confident gold and silver are going to rally. That's the same kind of thing here. So either way, I'll get this one out, and then it'll be on my radar if there's any kind of reversal in Bitcoin. Then this will go out as a long trade idea. Where to? Right here. I'm going to give you a first target right now in case anybody decides to take it, or if it after hours. 152.54. You always sell a little shy of the actual resistance level. That would be a pop of 36%. That would be a T1. Put it here now. It's probably going to be confusing when I get the post out on this. I'll screenshot it. But anyways, top of the zone's hit. Now there's still more downside to the bottom of the zone, another 10% just to get to the bottom. So, that would be a more ideal, obviously more advantageous place to go long. But I give you zones when my degree of confidence, price targets are usually precise levels, but this is more of a support zone. It's exactly what the name implies, a zone of support. So we get down there. It's an objective long here, down 2, not below. But since they're reporting tonight, it's, again, a big crapshoot. If they come out and say they might have to start selling Bitcoin, the bottom could fall out of this stock. And if they say something that the market likes and they can lift Bitcoin up, then boom, 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 boom. This would be my third target right here. So these are not official yet because I want to see what they say and what happens tonight. But I'm going to give them to you now just in case things happen to move fast. That's what all these videos are for. Try to get things out in advance. Levels to watch so you can react. I hate hindsight stuff. I hate the fact that QQQ trade reversed as quick as I put it out there today. Can't get them all, but that's why, again, I do these videos so you can have the setups and you have your game plan. You're ready to go when something falls to support or breaks out of a chart pattern. All right, I will wrap it up now. This has been Randy Finney with Right Side of the Chart. Have a great day.